Good evening, friends. This is the third episode of the educative series released to explain the core concepts in financial market. The how and why of various processes used will be explained in this series. The episode will run you through the buying, selling, or holding of gold and the various modes of acquiring gold or gold equivalent. There will be many questions that an investor generally has over a gold or holding or storing of gold. Like, what is the mode of holding gold? Why hold gold in the first place instead of other assets? Who can own or buy gold? When will the gold reach me after I buy it? Where is the gold stored or how can it be stored? How can I be sure of the purity of gold? And many more such queries. Towards the end of this presentation, we hope to educate you on the various modes of holding gold or obtaining gold, and also some of the queries would be answered. Before we go into the nuances of the process, handling of the queries, etc., we will take a look at the credentials of speaker, disclaimer, and thereafter follow it up with the subject matter. A brief introduction of the speaker would be in order for one to get a more confidence on the information or data so provided in the video. I, Ramkumar Krishnan, am a veteran in the industry, having put in more than 30 years of service. I headed business development and new projects in one of the marquee institutions operating in the capital market. I was also the chief operating officer of a commodity repository and an insurance repository for a few years in my career. A disclaimer is a need to ensure that the educative series is not confused by the listener as a recommendation to take action in the market. I am currently not registered with any regulator like RBI or SEBI or IFSCA or IRDAI or PFRDA or WDRA to act as an advisor or as an analyst. This is an educational video purely with a view to educate the uninitiated. The situation described in or alluded to in the course of the presentation is based on the extant rules and regulations prevalent in India. Should you find this video informative and educative, kindly pass it on to your family and friends. Please press on the join button and subscribe to this channel. You will typically find updates being put up on this channel late evening every Sunday and Wednesday. The last screen will indicate the subject matter of the next video. Gold can be held either in the physical form, as many of us are doing it presently, or in the electronic form. This percentage is very less, as very few people are aware of these options. Each type or mode of purchasing or holding gold has its own set of risks and ease of obtaining it. This aspect will become clear by the end of this episode. In the case of holding of physical gold, we have the following modes of holding it: buying physical gold from the local jeweler or a dealer, buying gold from a local commodity exchange like MCX and CDX, buying gold by way of EGR, that is electronic gold receipt from BSE or NSE, buying gold by way of BDR, that is Bullion Depository Receipt from Gold Exchange operating out of Gift City in Gandhinagar, Gujarat. You will need to ensure that the receipts or contract notes are safely kept for further use or enquiries, etc., as and when you take position in gold in terms of buying or holding. Buying physical gold can be made in weightage like bar or coin or guinea. Before you take the possession of gold, you need to check the purity of the gold so bought. You should ensure that the purchase has a stamp and seal mentioning basic details like weight, purity, assaying agency, identifier, etc. This carries a risk of transport and storage, as you would need to get it home and keep it at home or bank locker, etc. Another type of buying physical gold can be made by way of jewelry form. Indian ladies have traditionally used this method to hold and pass on gold from generation to generation. They have now proven to be very smart as we speak, since the cost of gold or the price of gold has risen over a period of time. Before you take possession of gold, you need to check the purity of gold so bought. The advantage is that the ladies can use it for festive occasions while using it as an asset with a possible future appreciation. The disadvantage is due to making charges, changes in design over a period of time, etc. This carries a risk of transport and storage, as you would need to get it home and keep it at home or bank locker, etc. The third type is you can buy gold from a commodity exchange like an MCX or NCDX. The gold is available in various denominations based on the products launched by the exchanges. The commodity once purchased and thereafter delivered is stored in the empaneled safe deposit vaults attached to the concerned commodity exchange. The product sheet issued by the exchange provides the weight, purity, etc. like 995, 999, X delivery location like Mumbai, Ahmedabad, etc. These details are available in the package list available with the safe deposit vault. The risk is far lesser than holding physical gold at home or in the bank locker since the storage is at an accredited safe deposit vault which have high levels of security, insurance, etc. You can buy gold through an EGR, that is electronic gold receipt, from a local exchange like BSE or NSE. The gold is available in various denominations based on products launched by the exchange like 1 gram, 10 gram, etc. The commodity once purchased and thereafter delivered is stored in the accredited safe deposit vault. The product sheet used by the exchange provides the weight, purity like 995, 999, etc. These details are available in the package list available with the safe deposit vault. The risk is far lesser since the storage is at an accredited professional safe deposit vault which have high levels of security, insurance, etc. Of course, you would be required to pay storage charges, hence this is a bit more expensive than storing gold at home or in the bank locker. This product was launched by BSE in October 2002. However, this saw very low volumes and is currently not available since some clarity on tax treatment on DMAT and REMAT of EGR is awaited. You can buy gold also through a BDR, that is Bullion Depository Receipt, from the India International Gold Exchange IFSC Limited, which is operating out of Gift City, Gandhinagar, Gujarat. The commodity which is purchased and stored in the accredited safe deposit vault. The product sheet issued by the exchange provides the weight, purity like 995, 999, etc. These details are available in the package list available in the safe deposit vault. The risk is lesser since the storage is an accredited professional safe deposit vault which have high levels of security, insurance, etc. Of course, you would also be required to pay storage charges. But since this gold will be stored at SEZ area, that is Special Economic Zone, to get it out of the area would involve paying customs, etc. So typically individuals can invest in gold in this market up to the extent of the LRS declared by RBI. Currently, it is about $250,000 equivalent in rupees for an Indian individual. Now, we will talk about the gold in electronic form. This is available in the form of ETF, that is exchange traded funds, and SDR, that is sovereign gold fund. ETF is an exchange traded fund. ETFs are issued by many of the mutual funds operating in India. The ETFs by definition is a tradable instrument with the underlying gold held by the mutual fund in a safe deposit vault. You will not be able to insist on getting of the physical gold, and the gold is always covered by these ETFs. This is less riskier than holding physical gold since these are in unit form and held in your DMAT account. SGB is the gold sovereign gold bonds. This is issued by RBI on behalf of the Government of India. This can be obtained only by resident Indians. Minimum unit is 1 gram and multiples thereof. The tenure is 8 years, that is up to full maturity, with an option to exit on the 5th, 6th, or the 7th year. There are maximum investments limits based on the weight bought in a financial year for different categories of investors like individuals, HUF, etc. Interest rates on the amount invested would be about 2.5% per annum, payable half yearly. This carries least risk as it is sovereign in nature. If you have gold in the form of bricks or coin or guinea or gold jewelry without gems, stones, etc., you could also monetize the gold so held by you. So basically, if you look at buying physical gold and in terms of brick or coin or guinea, as was mentioned earlier in this episode, you can actually use that to get interest for yourself till the time it is idle. The minimum deposit quantity is 10 grams of gold and multiple thereof. Designated banks are allowed to issue gold bonds. This is available for residents only. The principal amount invested would be in terms of gold, and the value determined by the gold so deposited is treated as your base amount or principal amount. The interest on this amount is fixed based on the amount. The interest is payable yearly or on a cumulative basis based on your option. At the time of exit, one can withdraw in terms of gold or rupee equivalent. There is a lock-in of 1 year from the date of purchase, after which premature redemption can be done. The interest on gold in this scheme is less than the SGB scheme explained earlier. We trust you have understood the basics of buying, selling, and holding of gold. The next episode would be on the process of demat of physical shares. Please join in on the next episode. Should you have any doubts, queries, or clarifications, please reach out to me at ramkbharosay@gmail.com. Thanks.